Celebrities are frequently targeted with honey traps. However, average person like you and me targeted for money trap and a debt trap, we call it credit card. Your social media feed is filled with videos showing you how to leverage cashback and perks to generate money with your credit card. Believe me, this is a debt trap. In this video, I will tell you things that credit card corporations don't want me to mention. Watch the entire video and keep a sharp scissor handy to cut your card into 2 pieces and throw it away. I am confident that you will do it after learning what credit cards do to you and your family. The credit card sector in India is thriving, but it's sad. According to a 2023 RBI report, there were over 78 million credit cards in circulation in India. According to CRED, the average number of credit cards per user in metro cities is 2.3 compared to 1.5 in non-metro areas. A survey by American Express India showed that 72% of respondents consider reward program as the most important factor when choosing a credit card. If the credit card industry is expanding, that's fantastic, isn't it? Are you wondering why I'm saying it's sad? If the mutual fund industry, stock market and bond markets increase, I feel great because your money will also grow. If the credit card industry expands, it implies you're spending borrowed money and will soon be financially broke. Why is debt bad? I'll give 2 reasons. One is emotional, other rational. First, the emotional. Debt is an unpleasant emotion. You may enjoy the immediate rewards of the products purchased on credit, but you know for certain that it is not your money. When you buy things with borrowed money, you are constantly under pressure to earn more in order to repay it. Now, let me give the rational reason. Debt is making someone else affluent at your expense. If you pay interest, you lose. If you receive interest, you win. Do you want to be a loser or you want to be a winner? Let me explain the maths in a simple manner. Pay close attention to what I say. Personal loan interest rates range from 10.5% to 24% per year depending on your income level. What are you doing if you take out a 10 lakh personal loan at 12% interest and pay an EMI of rupees 22,024 rupees over 5 years? You're paying 22,024 rupees multiplied by 60 months, which is rupees 13 lakhs 21,440. You enjoyed the 10 lakhs now and will end up paying 3.21 lakhs in interest. On the other hand, if you save and invest this same money in mutual funds on a monthly basis and get the same 12% return rather than giving it to the bank as interest, do you know how much money will you receive after 5 years? You will receive rupees 18,16,679. Now tell me, will you take a 10 lakh now and pay 13 lakhs in 5 years as an EMI of 22,024? Or will you invest this 22,024 rupees for 5 years and get back 18 lakhs? If you want to be a winner, you will select the second option. Also tell me, how would you feel when you have a 10 lakh outstanding loan in your loan account compared to an amount growing in your investment account? Obviously, you will feel better if you do not have a loan and instead have money in your investment account. That is why I say that debt is bad. But what about the credit cards? The credit cards are the worst type of debt. Those with higher incomes would use credit cards not for credit, but to earn cashbacks and perks. They pay the entire amount swiped on time. They too fall into the trap of overspending, but they are not the ones who actually suffer. My focus here is on the low income people. If you earn between 2 and 10 lakhs, you are the ones who pay the highest interest. While the rich receive the cash back and the rewards and the credit card companies make profit, it is from your high interest. Credit cards have highest interest rate of 35 to 40% per year compared to a 8.5% home loan. Furthermore, you only pay 5% of the outstanding balance, which is the worst trap. If you have 50,000 outstanding on your card, you simply need to pay 2,500 per month. Only 500 rupees out of this is the actual capital repayment, while the other 2,000 is simply the interest and the tax on the interest. By the way, if you miss the deadline by mistake, the penalty is approximately 1,500 rupees plus tax on that. Then it also gets added to your outstanding and you will pay 4% interest on that. If you don't pay your credit card bill for 6 months, this 50,000 outstanding would turn into 1 lakh rupees with accumulated fees, interest and tax. As we see in the movies, the illiterate gundas, the money lenders, lend money at 3% to 10% per month and they only keep collecting the interest. In fact, a friend of mine borrowed up to 20 lakhs from couple of such lenders at 5% per month while he was out of work for 2 years. For the past 4 years, he has only been paying back the interest. He would somehow manage to earn close to 2 lakhs from a consulting work, but each month he has to pay 1 lakhs. Of course, he asked me for help and I bailed him out. You could get the same thing from credit cards. You only pay the interest and the capital remains as it is. What should we do now that we know the credit cards are bad, especially if you are in the low income group? If you can, while watching this video, hide your credit card somewhere and forget about it. If you are unable to do so, accept the no credit card challenge for 3 months and repeat it for the next 3 months. But what about the emergencies? Who can we ask for money? And if we have the card, we can simply swipe it. Is that your question? Set aside 5 to 10,000 rupees per month or up to 2 to 3 lakhs if you can afford in an emergency fund. Check out the link in the description for the emergency fund. These are the safe liquid mutual fund plans that allow you to add any amount instantly and take it back within a working day. Furthermore, you also receive the daily interest of approximately 0.5% each month. You, the low-income population, are the driving force behind the credit card industry's growth. You will grow and win if you act wisely and escape this perilous debt trap by converting your expenses on cards to investments. You will no longer pay interest from your hard-earned money. Instead, you will begin to receive interest on your investments, allowing you to increase your wealth. I hope and pray you would make the decision to say no to credit cards. Even if only few families do so, I believe it is worth the effort to create this video.